Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and in this occasion I'm here just to share with you a quick review on Amazon and on Apple. We're gonna take a look on the main report, basically the highlights from the earning results. We're also gonna take a look to the charts mainly. So let's go again to the quick presentation and share the screen with you so you can see in detail what we can expect from these two ones. Remember, last week we also give to you a prediction and review and a few comments on the last results introduced by technological sector in the United States with a few companies. And I believe in this case, everything is going in line with this also, these expectations we got from the previous week. Everything looks really well. The only one we have seen that recently introduced results that it was not doing so well, it was eBay. From a technical perspective, it's still resisting in the market because after all, this is a sector. If the technological sector is doing well, even those companies who seems to be not so much stronger or let's say weaker than others, even those ones are surviving. But we also can find our favorites from the research. The videos, I did a Bloomberg interview on Wednesday evening. I believe it was on Thursday evening actually. And one of the things we mentioned about Apple pre-results, it was actually that the price it was giving to us really good entries, super discount compared with other recent levels in the previous months, and therefore it was probably one of the main reasons to hold on the portfolio, regardless the concerns on the drop on the sales, the high competitive they got it, high dependency also on the Chinese market, but we're gonna see all in detail now. So let's move on and start to take a look closely about what we can expect from this company. So first of all, Apple summary after results. Apple Q1 revenue decreased by 4.3% to 90.8 billion. So I'm gonna show to you the net incomes in chart, so you will see in detail clearly in a chart what exactly happens with the incomes. But now let's go to the release of the results. But exceeds analyst expectations for 90.3. So again, it was dropping the revenue, but still it was better than expected because the market was expecting 9.3 billion and it was 9.8 billion in revenue. So a good surprise. Probably the reasons why the share was dropping recently in the previous couple of months on the market was caused by this negative expectation, and after all, it was ending well. By the way, closing on Friday, almost 70% up the stock after results. Profit exceeds Wall Street estimates. But Apple revealed the largest stock buyback in history of the United States. This is another news that it was shocking the market. They announced the largest stock buyback in the history of the United States. And in any case, they always say, let's say CEOs, companies, that stock buyback is one of the signals to prove that the management team believe in the future of the company and so on. But everyone say the same thing when they announce this kind of buybacks. Plans to unveil new iPads on May 7, which means next week, by the time you see this video, because I'm recording this video and the closed market in London evening, by the time you see this video, probably it's already the starting of the week. So pay attention on 7th of May, which is, I believe, 7th of May is probably Tuesday, if I'm not wrong. No, it's Tuesday. 7th of May is Tuesday. So pay attention to the market on 7th of May. Because as always, this company is based on the sales, the expectations they got on sales of their products, and it has been a leader on hardware in the industry. So therefore, if they introduce anything particularly nice and it's well accepted by the public and the fans of Apple, then the results will go well. So we probably gonna see the next days after the presentation of iPad, we will see how the sales of the new devices are going and so on. Apple self-driving car, this is a negative aspect. Apple self-driving car project was cancelled, indicating potential challenge for new products growth. I did previous reports of a company where I was showing to you the history of the company, the origins of the company, the challenges of the company, and so on and so on. So you can go to our previous reports if you want to see in detail about more details about the company. But in summary, for a quick update, I think this is a clear view. Better than expectations. Still, we're gonna see probably more movements on the price in the coming days, based on the sales and the new devices. And as you can see, after all of these blah 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 words that the companies released to the audience, after all, we can see that what the shareholders really care is this net income from Apple, and you can see it's flat. It's even lower than the previous one in 2022, September 2023. Let's see how this year is going. But so far, the company for the last 3 years has been flat in terms of incomes, net incomes. So I was also checking debt of the company, and not too bad at all. I mean, it was just simply more stable and even decreasing the debt. It was also Amazon has been cutting expenses since 2022. So nothing particularly important there. Now let's take a look on Amazon and let's jump to the charts and to see the prices, which is mostly everyone is interested to see. Okay, apart of this, we can find all of this information in a few articles and reports. We want to know exactly what is the view on the chart and what the market is discounting in terms of price for these two companies. Let's go quickly to the summary of Amazon, and we can also take a look on the charts of both. Amazon Q1 revenue growth by 13% to 143.3 billions, beating guidance. So good, positive results, better than expected. AWS Cloud Services revenue growth 16% year to year, while had revenue grow 24%. It's interesting because one of the main problems that Amazon was getting is the last couple of years, it was actually the cloud services are high competence market, and they were facing now a new competitors in the market rising every year. Operating profit reached a record of 15.3 billion. Interesting. Margins improved to 10.7% due to cost savings and advertising strength. This is now. Margin improved 10.7%. They have been cutting expenses since last year, and since the drop they got it in 2022 while they bought another company and a new project that it was like, I believe, 11 billions of dollars. So it was literally hitting the results of the company, and for the first time they were giving negative results. So yeah, they had been adjusting the balance since then. Demand trends remain favorable across business units, and AWS transitioned from stabilizing to growth with AI contributing to demand. They also mention, and if you want to go into detail of these projects, you can take a look of the press release they did with the results to see in detail what's the project. But they has other techs that obviously they made mention of AI to customize the experience of users in Amazon shops and so on, and find out the products directly to the final customer. Even if we told you order the products, Amazon gonna offer to you, blah blah blah, because the algorithm is improving. And as you can see, we can see the net income in the case of Amazon, and again, it's not even flat, it's recovering. In 2023 was recover what they lost in 2022, which it was not a massive loss, it was an investment that it was hitting the balance sheet of Amazon. And probably for this year, we can expect that the results will be between the ones they got in 2023. So far, they're going well, which therefore it means a good signal. Let's go to the point and the most important thing. And as always, we're going to take a look, first of all, to NASDAQ, because NASDAQ is the main index. And if you take in consideration the way this Amazon and Apple got on the index, obviously, it's a massive way. So what I'm trying to say here is like, if we check Google, Amazon, Apple, all of these massive giants on the technological sector, obviously the projection of the price of those companies are giving us by discount of the projection of the price of NASDAQ 100. And as you can see here, this is the previous report from last week. We were giving an estimation, and even if the index was dropping to the levels of 17,000 points, which is something that happens 2 weeks ago, even in that case, it probably will invite for others to buy, to push the price up, because obviously it was an important resistance, and therefore now a new, fresh and strong support for those new ones who want to enter in NASDAQ. That was the last week. This is the chart from last week. Now you want to take a look of the chart today is this one, which means yes, NASDAQ is recovering and is going straight away to 18,000 points, pushing 18,000 points to new maximums, and probably the target is 20,000 points, 20, 50 points, doesn't matter, but 20,000 points, the new target, and in long term, even 23,000 points, just reproducing the range done for the last 2 years in the market, coming back to 23,000 points, a new record on NASDAQ 100. So really good expectations again. And if you summarize this, and additionally with the macroeconomical aspect, with this Federal Reserve's view last week, which is the end of this week, plus also the unemployment rate rising up in the United States, NFP, non-farm payrolls, lower than expected, all of this is pointing in one direction. Federal Reserve is going to be kind with Wall Street, and therefore the market is gonna probably continuing rising again. So far the results, or the answer from the market to these results from Federal Reserve and from the labor market was positive today on Friday evening. The market was responding well, so we will see how the next week is going. But I believe the things are gonna be calm if after all this war process in Middle East is calming down. Also, Blinken making this kind of road tour around the countries in Middle East just to find an agreement. Everything should be calm and fine. Amazon charts we got also here. Take a look. With Amazon, the movie is completely different. We got long-term chart, which is showing to us that we should be very cautious in $190 because it's a clear, strong resistance for Amazon that they have been facing 3 times already in the past, and therefore be careful because the price could drop from there unless it's breaking up new top records about $190 per share. And in that case, yes, we could wait for pullback, so we can simply increase our position and take new fresh positions in Amazon. But so far, right now, the market is giving to us a clear signal of wait and see what happens, right? A correction, even for those ones who like short trading, they could even choose a various position shorting the market here. I'm expecting to at least turn to 140. In long term, we are watching weekly candle. If we take a look on short terms, which is the daily candles, you can see that obviously it seems to be doing well since 2023, rising a clear bullish trend. But as you can see, we got the historical records, as you have seen the long-term chart, on $190, touching twice, and this is the 3rd time we touching those levels. So be cautious again, because it could turn the market down and come back to $170, $185, which is more or less what it is right now. Be cautious, and that's it. Wait for and see what happens with Amazon. In the case of Apple, super nice chart. We have seen this chart is from yesterday, before the results, and as you can see, those levels pointing here 173, even 165. It was supports from the previous areas. The projection of this movement, if we take in consideration the previous bullish movement, lateral cycle in the market, and now rising back again, if it's breaking up $192 per share, $195 per share, let's say, probably we're gonna see a projection that eventually could reach targets in $250, $260 per share. Will complete the movement and replicate the movement from the previous one. All right, so really good aspects also on Amazon, also on Apple. Yes, keep updated. If you like this kind of reports, give me a thumb up, subscribe the channel, and also leave me your comments if you want we analyze any particular stock that you're following or any other kind of asset that you would like to see in detail. Okay, good luck with the market, and if you want to contact me, here is my details. Here you go. You can send me an email, you can just contact me through the social networks, and I can prepare any kind of content up to you, completely free. Okay, see you next week. Bye bye.